Michael Burry successfully predicted US housing meltdown in 2008, and now he's of the opinion that meme stocks are about to crash. In this video, we will explore Michael Burry and his background, what are meme stocks and why he thinks they are on the verge of collapse, trading versus investing in stocks, and how you can generate wealth. Hi, my name is Sunny and I make videos that affect a common man financially. If you're new to this channel, please smash that like button as that will help me with the YouTube algorithm and it will be highly appreciated. Michael James Burry is an American investor, hedge fund manager, as well as a physician. He founded the hedge fund Scion Capital, which he ran from 2000 until 2008 before it closes to focus on his personal investments. Michael is best known for being amongst the first investors who could foresee as well as profit from the subprime mortgage crisis that happened between 2007 and 2010 in the United States, which we all know as the US housing crisis. He thought at the time the US housing market is in bubble territory, thus he shorted the mortgage bond market in 2007. Ultimately, when the US housing market crashed, he being only handful of people who stick out their head, thus naturally the big crash and his big bets against it made him tons of money for him as well as his investors. So experts are of the opinion that he has got a knack of picking the trend early on as well as his track record proves his credentials. This has given him the nickname Big Shot as he has shorted the housing market. Famously, Hollywood has made a movie about it. As reported in CNBC, Michael Burry reportedly said Reddit flavored meme stocks will crash as the new money dries up. He has even compared these meme stocks with the dot-com and the US housing bubbles of previous decades. He further says that when you are inside the bubble, you don't realize it. You can see it in the hindsight. By the time most of us realize it's already too late and the asset prices are way overinflated. So when the person of the stature of Michael Burry speaks about meme stocks and its inevitable crash, people take notice. In simple terms, you can say that he has got a sort of sixth sense, thus he can successfully predict the change in trends that affect the financial markets, which finally help him and his investors make millions in the process. In simple terms, meme stock is the one that sees increased popularity or awareness or buying based on social media discussions, and one particular platform which is at the center of all these meme stock rallies is Wall Street Bets on Reddit. It has over 10 million readers. Experts are of the view that it fuels its audience to follow trends by rallying behind a stock, sometimes to no apparent end. Other social media platforms like YouTube, content creators, Facebook communities, Twitter hashtags, etc. propel these meme stocks to the moon too. All these technology platforms sync very well with the new generation. That may be the reason millennials are more inclined towards meme stocks. Some of these stocks are GameStop, AMC, BlackBerry, etc. And recently, people have brought Robinhood into that category. Remember, the whole logic is if the stock price moves just on the basis of social media sentiments, that has got little or no justification based on the basic fundamentals. From GameStop in January to AMC in June 2021, these 10 million members of Reddit have driven the conversation in so-called meme stocks. Strong demand for these stocks with sometimes shaky fundamentals have led to several hedge funds blow up as they were caught on the opposite side of the trade betting against the company in question because they were thinking these were struggling businesses and as a result they were shorting their stocks. Even hedge funds with huge financial clout could not turn the tide against overwhelming retail demand for these stocks. As a result, they have lost tons of money. Now, Michael Burry is saying if this unlimited supply of money or demand is hampered in any way, there is bound to be a crash in such stocks. Don't get me wrong, Both investing as well as trading in stocks is perfectly okay as long as you are within your risk tolerance. Both are two different and opposite ways of making money in the stock market, but there is a difference between making money and generating wealth. You can make money by trading, and once in a while, you can be lucky and can hit a jackpot. But if you see the big wealth creators on the stock market, mostly these are the ones who invest with due diligence and patience. Investing is when you dig deep into the company's financials, then compare it with its stock price. When you see there is a disconnect or discount in its price, you jump in and buy the stock, keeping in mind where it can go in the future. It is as simple as that, where you need to patiently look for such opportunities and then wait till they reward you handsomely. Very famous example of it is Berkshire's Warren Buffett, where he carefully selected stocks which were selling at discount at the time with good future prospects, thus over a period of time became one of the richest men in the world. Another example can be ARK Invest's Kathy Wood, who invested in Tesla through her ETFs over a period of time when Tesla was undervalued. In both the cases, investing has made billions of dollars for both Berkshire as well as ARK Invest shareholders. These are one of the many examples that we can see around us. In my humble opinion, trading in stocks can only take you so far financially, but investing is where the real wealth and fortunes are made. As a disclaimer, I'm not a financial advisor. Please consult one before investing. This is my take on the topic Michael Burry and meme stocks. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching. See you next time in the next video on your own channel, Sunny Snippets.